Hello, my name is Jonathan Gurney, Portfolio Manager at Gurney Financial. We're going to try something a little unique here that we have not done before. The purpose of this Stock of the Week segment is to give a fundamental and technical overview of a stock that our clients ask about. Our goal is to close the gap in communication between clients and the actual person managing their assets. We hope the charts and education help clients and viewers alike. Friendly reminder that this video is not to be taken as financial advice. Should you have questions, feel free to reach out to us through email, social media comment section. We recently released a new website. All this material will be on there. Check it out if you have a chance. Weekend updates on the stock market in general. If you subscribe to our YouTube channel, we'll pop up on your phone. That might be the easiest way, so check that out. We're going to transition now, first of all, into a fundamental overview of Nvidia. That is the stock of the week, and we will transition there now. Okay, so Nvidia, ticker NVDA. Again, fundamental perspective. We'll give you some overview first. Recently reported earnings on November 11th, so pretty recent. What do they do exactly? Nvidia provides graphic processors for various devices, including PCs, mobile phones, and tablets. They are a growth company specifically within the tech sector. Drilled down a little further, they are a semiconductor. Some of their big competitors are Advanced Micro Devices. You might know them as AMD, their ticker symbol, and Intel, INTC. Third quarter 2020 results, they beat on the top and bottom lines. But quarterly revenue guidance was below expectations. So a lot of times as an advisor, we say a lot of terms that you may not understand. So beating on top and bottom lines, beating on top line is beating on revenue and gross sales. Beating on bottom line references net income. So top line, revenue and gross sales. Bottom line, they beat expectations on net income. Keep in mind that these are analyst expectations. If we take a deeper dive here by looking at overall revenue, the last 4 quarters that they have reported has been a decline. So despite beating on expectations, again, they beat on earnings expectations, 178 versus 157. So a pretty big beat in terms of expectations. Revenue, they beat 3.01 billion versus 2.91 billion. Again, these are expectations. Nvidia's revenue fell 5% year over year. The company sold inventory that had previously written off in the quarter, but revenue has now declined, like we said, 4 straight quarters. Nvidia's largest business segment, gaming, shrunk 6% year over year at 1.66 billion in quarterly revenue, which is above the 1.54 billion consensus among analysts. So in terms of guidance, this was the one concerning thing in terms of meeting expectations that they did not meet. They guided down 2.95 billion in revenue, which still implies a 34% increase down. So they basically mixed the expectation. The expectation was 3.06, so 2.95 billion in revenue versus 3.06. So kind of a mixed picture. Overall, the year, the stock is up over 50%. Understand that it is within the semiconductor sector. So that sector has done quite well. So from a fundamental standpoint, here's what I would say. They're beating expectations. That is a good thing. And it's a good backdrop. Like I said, for the entire overarching market, going into an earnings season with low expectations is not a bad setup, especially when the Fed was cutting rates. Again, that's just kind of common sense stuff. That is what is happening with Nvidia. They had a few issues. You're seeing that their financials are not spectacular. So from a fundamental standpoint, I can't really say that this is a great stock from a fundamental standpoint, but you could argue even a stock like Amazon, which has exploded since their inception and really hasn't had a great financial balance sheet, is doing quite well. So the point being is they're beating expectations, which is a good thing. Is everything, great for this stock fundamentally? No, that's just the reality. So let's switch now over to a technical aspect of things and give you our perspective there. First of all, the stock is trading above its 50-day moving average, which is the blue line. Again, if you don't know anything about charts, the red and green shows you daily movement, and these are called candles. And so overall, the last 6 months has been quite good. Since basically June has been fantastic. For the year, again, is up over 50%. It is a good short-term trend in the fact that the 50-day is above its 200-day. So 50-day moving average blue over the red 200-day. So that's another indicator that many technical analysts like to see. Another thing that we like to see is that it is holding the 10-day moving average, which is this purple line. It's basically followed this very closely since October. A lot of institutions will gauge buy and sell movement based on whether it can hold its 10-day moving average. Sure, it's going to go below that at times. So really short term, if we're looking at it from November till now, this is actually very good consolidation period, saying, hey, we had a good rally up, sideways movement. And look what that does. We've been trying to preach that sideways movement can be good for the overall market, which is what we saw this week. Sideways movement is actually bringing the RSI, or relative strength index, below 70. 70 for many analysts, technical analysts, is kind of an overbought level short term. Doesn't mean it can't stay above 70, but oftentimes struggles to remain there for a long period. So it is not overbought. It has an RSI of 60.52. So in that sense, it's actually, from a technical standpoint, is at a good level. There's not really too many things concerning about it. It is trending and beating the S&P 500 since June. This is the comparison between the stock and the S&P 500, doing well the last 6 months. Also in comparison to its sector. So in comparison to semiconductors, it's also doing very well the last 6 months. So let's take a little more long-term perspective here and see how it's actually doing over more of a 5-year period. I'm going to update that. We'll review that. So this kind of gives you the full picture. You might have said, wow, on that last picture, I thought it was at all-time highs. It is not. So here's kind of a lesson for you. As I was saying, when the blue line 50-day moving average is above the 200-day moving average, that's not a bad thing. It tends to trend very well. Understand this is a growth stock. A lot of volatility. It is going to have huge fluctuations. In fact, when it went from 291 to 124, the end of December, October, December 2018, I mean, that's a huge move down. So again, these are growth companies. This is going to happen. So expect that. But overall, its scooter rating is holding above 90. Many technical analysts like to see, and sometimes only even buy stocks that are momentum-wise trading above 90. I don't necessarily play that game, truthfully. It's good to know from a momentum standpoint that it is doing well short term. So short term, this consolidation after a nice move higher is good price action. It doesn't mean it can't go lower. Honestly, I do not own this, nor do my clients. Seeing a little bit lower price action, maybe to its 20-day moving average, would be a good thing. And I'll show you that. So maybe it retests like it has before the 20-day gold line, 20-day moving average. So if you're going to get into this is more of a long-term hold. It's going to have crazy fluctuations. Personally, I think from a fundamental standpoint, there are better stocks in that sector that I like better. But let's take a quick look at the sector that it's in. Since August, it has had, the sector that it's in has had a 26% move. That's a quick move over a couple months. It is kind of backed off of oversold levels. Again, 70 oversold, backed off. So maybe this does get another bid soon. And again, a scooter, it's clearly done well during these dips. I mean, it's pounced out of there and done quite well. understand this: it is going to be highly volatile with trade with China, but it has done recently, because there's been a lot of optimism in trade, done quite well. So just wanted to show you that. Hopefully this helps. Again, a fundamental and technical perspective. I do not own it. Maybe on a pullback I consider it, because it does have a lot more upside. But at this point, I am not interested. I think we're going to probably take a little breather in the market, but it is actually holding up quite well. A follow-up to Twitter that we basically was the stock of the week a couple weeks ago. It is still trying to build a base. The scooter is ugly. It has problems, but it could be a value play, a high-risk value play. One thing from a technical standpoint, where many analysts would say, I'm not going to touch this with a 90-foot pole, is that the 50-day crossed the 200-day. Again, I don't necessarily always take that perspective. If the market goes higher, I think this has a lot of upside. But I, too, am not just kind of waiting, stalling, waiting to see what happens. But overall, price action in the market has been pretty good. So I hope this analysis helps. Let us know if you have questions, and please give us more stocks that you're interested in. So the summary on Nvidia: fundamentals, not a great picture, but they did beat expectations. From a technical standpoint, is actually holding up quite well, has room to run. I'm just personally not interested in this stock at this time, because I think there's better stocks within this sector. Hope that helps. Have a great weekend. Let us know if you have other stocks you want us to take a look at. Thanks again.